It's Thursday, January 22nd, and it's time for your morning market update from the garage. Bitcoin is sitting at 89,000, Solana is at 128, Ethereum is at 2,900, and the setup this morning is clean but tense. The market feels like a fast car cruising a straightaway. Smooth road, good traction, but the coolant needle just ticked up and everyone in the driver's seat knows it. Let's start with the data, because it matters. US growth just came in hotter than expected. GDP revised up to 4.4%, the strongest pace since late 2023. That's the engine still pulling hard. Consumers didn't stall, the labor market didn't crack, jobless claims stayed tight. But here's the part traders can't ignore. The price gauges inside that same report heated up. Core PCE at 2.9, the GDP price index jumping to 3.7. That combo tells you the economy isn't slowing enough to force the Fed's hand. Translation, there is no emergency, no rush to cut. High for longer stays on the dash. Now zoom out to the headlines. The Greenland tariff standoff got put in park, a framework deal, a pause, a diplomatic breather. That's why equities can exhale and Europe caught a bid. But don't confuse hitting the brake with fixing the suspension. The bolt is still loose. It's quiet for now, not resolved. Here's where your eyes really need to be. Bonds. Japan is the wheel bearing you can hear starting to hum. Yields there have been creeping higher, and that matters because Japan is the funding source for half the global leverage machine. If Tokyo flares during Asia hours, it can yank US yields and smack risk assets without warning. Stocks don't get a memo. Crypto doesn't get a heads up. It just hits. Crypto itself is in a transition phase. It feels like the street racers are swapping seats, paper hands stepping out, strong hands lining up at the on-ramp, waiting for clarity. That's usually what happens before a real move, up or down. Now let's talk about tonight, because this is important. Intel reports earnings after the bell, and this is more than just one stock. This is the ignition switch for the entire AI and semiconductor complex. If Intel delivers clean guidance on AI compute demand, foundry momentum, or enterprise adoption, semis can rip. And when tech rips, crypto doesn't need its own catalyst. It catches the draft. If Intel disappoints, that risk-on engine stalls fast. Tech cools, yields matter again. Crypto loses the slipstream. Add in a few more sparks this morning. A Dogecoin ETF has officially launched on NASDAQ. Meme culture just got a brokerage account. Whether you love it or hate it, that's another step in crypto leaking into traditional rails. At the same time, Solana leadership is floating a big question. What if every major IPO was available on-chain the same day it hits public markets? That's a direct challenge to the old settlement system, and a glimpse at where this infrastructure fight is headed. But Washington is still dragging its feet. The Senate crypto market structure bill looks delayed into late February or March as lawmakers pivot to housing. So regulatory clarity, still stuck in traffic. Here's the garage plan. Watch yields like you watch oil pressure. Watch Tokyo like you watch the weather. Watch Intel like you watch the ignition key. If rates stay calm and tech lights up, crypto can run. If bonds spike or Intel misses, expect a shakeout before anything real happens. This is not financial advice, this is entertainment and education. Engines hot, safety off, let it rip.